Chapter number 14 Key Takeaways. Special audit considerations arise in audit of banks due to particular nature of risks associated with the transactions undertaken, scale of banking operations, extensive dependence on IT to process transactions, effect of statutory and regulatory requirements, and continuous rollout of new products and services. Every banking company is required to prepare balance sheet and P&L account in the form set out in third schedule to the Act or as near thereto as the circumstances admit. Form A of the third schedule to the Banking Regulation Act 1949 contains the form of balance sheet and Form B contains the form of P&L. It is pertinent to state that preparation of balance sheet of a bank usually involves preparation of standalone financial statements and consolidated financial statements. Preparation of standalone financial statements involves consolidation of branch accounts and incorporation of various verticals or departments of bank in case of nationalized bank or public sector bank. The detailed procedures in this regard may vary from bank to bank. In case of private banks, the processing of the accounting are centralized and there is no concept of mandatory branch audit in accordance with RBI guidelines. Most banks, especially those in nationalized banks or public sector, appoint four or more, depending upon the size and board decision, as per RBI guidelines, firms of chartered accountants to act jointly as statutory central auditors, SCS, four or more. As per the provisions of the relevant enactments, the auditor of a banking company is to be appointed at the annual general meeting of the shareholders, whereas the auditor of a nationalized bank is to be appointed by the concerning bank acting through its board of directors. In either case, approval of RBI is required before appointment is made. The technological developments have brought new challenges for auditors as audit is required to be conducted through the system. It is the responsibility of statutory central auditors to obtain understanding of the IT environment and various controls put in place by the management and evaluate whether controls are operating effectively. Banks are required to implement and maintain a system of internal controls for mitigating risks, maintain good governance, and to meet the regulatory requirements. Area of focus in respect of the internal control includes cash, clearings, bills for collection, bills purchased, loans and advances, interbank accounts, and credit card operations. Audit procedures have to be designed for verification of the items of assets and liabilities, taking into account special considerations relevant to the bank. Advances generally constitute the major part of the asset of the bank. The audit of advances requires the major attention from the auditor. There exists elaborate and detailed control system and procedure in banks pertaining to appraisal, sanctioning, documentation, disbursal, review, monitoring, and supervision of advances. Audit approach of advances should encompass designing appropriate audit procedures to obtain audit evidence in all these areas. Concurrent audit. Concurrent audit is an audit or verification of transactions or activities of an organization concurrently as the transaction or activity takes place. The concept in this audit is to verify the authenticity of the transaction or activity within the shortest possible time after the same takes place. Concurrent audit system is to be regarded as part of the bank's early warning system to ensure timely detection of irregularities and lapses, which helps in preventing fraudulent transactions at branches. The important areas to be covered in concurrent audit includes cash, investments, deposits, advances, foreign exchange, and housekeeping, etc. Banks are required to constitute an audit committee of their board in pursuance of RBI guidelines. One of the functions of this committee is to provide direction and also oversee the operations of the total audit function in the bank. The audit committee also has to review the internal inspection or audit function in the bank with special emphasis on the system, its quality and effectiveness in terms of follow-up. The committee has to review the system of appointment and remuneration of the concurrent auditors.